Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. And that's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel, which I'll go through in just a moment. I'm also on X, formerly known as Twitter. My name there is @DougPless. And note that Bookmap Discord is free and available to everyone, whether you subscribe to Bookmap or not. There's a lot of great content there. Again, free and available for everyone. All right, the focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as the directional bias. And the second step of my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups for entries and exits. And when I talk about setups today, I will be focusing on an underlying asset. And setups in that asset can be taken any number of ways. For example, the S&P 500 setups can be taken with ES futures, SPY shares, SPY options, SPX options, or ES options. And note also the setups that I talk about today are generally good for day trades, swing trades, or longer term trades. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel and Discord, as well as the chat and YouTube for your questions and comments. Please feel free to post, and I'll do my best to answer your questions. And hello, Don. Welcome. Good afternoon to you. Glad you're here. All right, here's my agenda for today, Thursday, December 21st. First of all, I want to go over news items, economic data, and events for today as well as the rest of the week. Then I'll go through my positional analysis. Then I'll review some setups from earlier today, and then I'll go over the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know, and I'll be glad to do that. And hello, Zachariah. Welcome. Glad you're here. All right, let's start with news items, economic data, and events. For today in gray, yeah, I do plan to cover the flash crash from yesterday. I can talk about some warning signals and what happened as well. All right, so let's start with, and let's see, I didn't bring that over. Give me just a moment. Start with economic data and events for today. First of all, this morning at 8:30 a.m. Eastern Time, jobless claims came out, as well as the final look at third quarter GDP. So GDP came in less than expected, less than previous, and jobless claims slightly lower than expected, but slightly higher than the previous number. All right, so let's take a look at the S&P 500 now and see that reaction to that data. And here's the reaction right here at 8:30 a.m. Eastern Time, a very bullish reaction, and so far the marking the high of the day for the ES futures. This is the ES futures in Bookmap. S&P 500 futures. So there's the reaction again at 8:30 a.m. Eastern Time, and so far marking the high of the day as price shot up, then started to move lower again. All right, tomorrow PCE data comes out at 8:30 a.m. Eastern Time. Also durable goods orders, and PCE data could be a market mover. And hello, trading for a living. Welcome. Glad you're here. All right, so that's news. That will wrap up the week tomorrow with PCE data, durable goods. All right, now let's take a look at. Move on to positional analysis. So this is the ES futures, S&P 500 futures in Bookmap. Before I take a closer look at this chart, I want to take a look at a larger time frame. I'm going to start with a one-day chart for SPX, the underlying index for the S&P 500. And this is the current rally began October 30th. And the rally continued for a variety of reasons. IV collapse, put Vanna rally, falling treasury yields, FOMC announcements and comments, benign CPI data has so far led to a huge rally up almost 700 points, starting around 4,100, and so far turning lower right around 47.70. And notice this is the upper weekly expected move for this week, and that acted as resistance yesterday. And we'll talk about that move lower yesterday in just a few minutes. All right, so this is the rally that began October 30th, and so far yesterday was the biggest drop in the rally. All right, let's take a look now at a shorter time frame, still sticking with the SPX, the underlying asset. This is a 30-day, 1-hour chart, and I'm going to zoom in on this just so we can focus on the levels that are in play for today. So here's the upper weekly expected move, and it looks like the high of the day was actually 47.78 before SPX broke below that level. All right, so that is the upper weekly expected move shown by the dashed purple lines. Here's the lower weekly expected move. So the lower and upper weekly expected move shown by the dashed purple lines. That's based on the options market, updated once a week. SPX trading within that range. Then the dashed blue lines are showing the lower and upper daily expected move, also based on the options market. I update that once a day. And SPX found resistance around the upper daily expected move earlier today, and now is trading in the middle of that range, the upper and lower daily expected move. All right, so those are the expected moves. Now let's focus on the Spotgamma levels. So first of all, I want to, these are the dark red lines. These are proprietary levels available to Spotgamma subscribers. Spotgamma has their own algorithms they apply to open interest data to come up with these levels and other information. So let's take a look at the key daily levels. So the first level that I want to take a look at is the put wall, and that you can't really see the label here, but it is at 46.95. There's kind of a cluster of levels there. So the put wall at 46.95, that did move lower from yesterday. That's the strike with the largest net negative gamma that can be expected to act as support. And the next level up, just right above that, is the absolute gamma strike at 4,700. That's the strike with the largest absolute positive and negative gamma. And that level also moved lower from yesterday, from 5,000 yesterday down to 4,700. And then finally the volatility trigger just above that at 4710. So including the volatility trigger at 4710, and that is Spotgamma's proprietary volatility flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, they have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. On the other hand, above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure, and that tends to decrease or subdue volatility. That level also moved lower. So a hat trick for SPX, volatility trigger, put wall, and absolute gamma strike all move lower. And while I'm at it, for SPY, those same levels move lower as well. So a hat trick for SPY as well, and that is bearish, all those levels moving lower. And then finally, the call wall remains at 4,800. That's a strike with a large net positive gamma that can be expected to act as resistance. And if price had continued to move higher, that would have been the next upside level. So 4,800 marking the potential ceiling, and today 4,695 marking the potential floor. All right, let's take a look at one other chart. Now let's continue to go to smaller time frames. Take a look at a 1-minute chart. So far today, SPX trading in a pretty narrow range, chopping around the upper daily expected move earlier today. Then looks like today finding support at the 4710 volatility trigger. All right, let's take a look at Bookmap now. On Bookmap, I have my own cloud notes, so I can show SPX levels. There's the SPX 4710 volatility trigger, and just below that, the SPY 469 volatility trigger, acting as support. I also have, again, SPY levels on this chart. There's the 470 absolute gamma strike. And acting as resistance today, more or less, the upper daily expected move for ES. Note there is a difference in price between ES and SPX. And today it is somewhere between 48 and 49. This morning when I was setting up my charts, it was closer to 49. That's what I'm using. Now it looks like it is closer to 48. So the 4710 volatility trigger is shown, should be at ES 4758. There's a 48 point difference between ES and SPX. All right, so those are levels in play for today for the S&P 500 futures, trading in a very narrow range. Again, I talked about shifts and levels, hat tricks for both SPX and SPY, volatility triggers, put walls, and absolute gamma strikes, all moving lower. All right, let's take a look at NASDAQ. All right, Zachariah, you can ask any questions. Any questions are welcome. There are no dumb questions. This is something that is new to a lot of people. Please do not feel intimidated at all. What I suggest is for definitions for these levels beyond what I comment on, go to spotgamma.com, go to the free resources, the support center. There's Spotgamma has a great resource center, help center that is free and available to everyone. So if you want more information about any of these levels, that's your resource. All right, this is NASDAQ, NQ Futures and Bookmap. And before I take a closer look at this chart, I want to take a look first of all at a QQQ chart. This is a one-day chart, one minute chart for the day. Showing the volatility trigger for QQQ at 405, more or less acting as support. Yesterday was all about call walls. I'll talk more about that in a few minutes. And today it appears to be more about volatility triggers. All right, so that is QQQ. Also trading at a narrow range during the cash session. Let's take a look at NDX. And NDX now trading back above its 16,650 call wall, acted as support earlier, and now NDX trading above that level again. Also in a very narrow range for today. All right, let's go to NQ Futures again. Again, I have my own cloud notes, so I can show QQQ levels. There's the 405 volatility trigger. And then here's the NDX absolute gamma strike call wall at 650. And note the QQQ 408 level acted as resistance. This is before the cash open, the reaction right after the 8:30 a.m. data. So Zachariah, again, the volatility trigger is a volatility flip level. Below that level, market makers' position on the gamma curve shifts to negative. In a negative gamma environment, they have to trade with price to hedge their delta exposure. Above that level, market makers' position on the gamma curve is positive, and they have to trade against price that tend to subdue volatility. So we're looking for enhanced volatility, higher volatility below the volatility trigger, and lower volatility, more narrow trading ranges above that level. And again, go to spotgamma.com for more information. All right, so here's the NASDAQ. We'll talk about setups in a few minutes. All right, let's take a look at gamma notional now to see how market makers were positioned on the gamma curve at the beginning of the day. This is market makers' position on the gamma curve at the beginning of the day for the S&P 500, NASDAQ, and Russell 2000. Note several of these numbers, they all shifted lower, and now gamma notional for SPX, SPY, and QQQ are all negative. These are the main numbers that I look at. So in a negative gamma environment, this means on this portion of the gamma curve, traders are long puts, market makers are short puts, And again, they have to trade with price to hedge their delta exposure. And these are all mildly negative, but shifted pretty sharply from yesterday. For example, Gamma Notional yesterday for SPY was 1.8 billion positive, and it shifted to 294 million negative. All right, so all shifted lower. Gamma Notional remains positive for the Russell 2000 and negative for the S&P 500 and the NASDAQ. Mainly looking at QQQ. NDX is not really significant. All right, let's take a look at I'm going to skip over the Vanna model again. There's nothing to see here. I'm going to shift to the, first of all, this absolute gamma strikes for SPX. There's quite a shift. As I mentioned before, there were shifts in levels for the SPX. So let's take a look. First of all, the absolute gamma strike yesterday was at 5,000. So this chart is showing gamma notional, market makers gamma notional. Orange bar is showing positive gamma, call gamma. And the blue bar is showing put gamma or negative gamma. All right, so that was the absolute gamma strike yesterday at 5,000, and it has now moved down to 4,700. So that's the strike with the largest absolute positive negative gamma. It's pretty obvious. That's the strike with the largest orange bar and blue bar. Put wall just below that. And that is really by definition the strike with the largest net negative gamma, although there's substantially more put gamma at 4650, 4600, the zeros and the fives basically. And then the call wall remains at 4800. That's the strike with the largest net positive gamma. So the orange bar minus the blue bar, and that is the call wall. All right, there's one other chart I want to take a look at. This is part of the new volatility tools at available to Spotgamma subscribers. What this is the term structure, the volatility term structure for SPX. And this yellow line is showing the volatility term structure from 2 days ago, from the 19th. And the blue is showing this for today. So you can see that volatility has shifted higher across the entire range of expiration dates. That's what's shown on the horizontal axis. And the shaded range is the recent range. I think that's the 10th percentile of the 90th percentile. So even though the volatility term structure has shifted higher, it's still low in this recent range. And note that there was a substantial shift higher right here. Let's just check those expirations. All right, so that's today, and that's tomorrow. So a substantial shift higher in the SPX implied volatility for today and for tomorrow. And then the term structure for next week is close to the term structure for that was a couple of days ago, just shifted a little bit higher. All right, so my thesis for the day was, first of all, looking for higher volatility, a wider trading range. So far, that's not really playing out, but that was based on this shift to negative gamma notional for the S&P 500 and NASDAQ, and also bearish for the day based on the shifts lower in the levels. Now, I forgot to mention shifts lower for the NASDAQ for QQQ. Volatility trigger and absolute gamma strike shifted lower. Put wall shifted higher, and then for NDX, the volatility trigger and put wall shifted higher. So for NASDAQ, the shifts were not as substantial as the S&P 500. All right, let's take a look at some setups now. So I'm going to start with the S&P 500. Let's see what options traders are doing today. So this is the hero signal for the S&P 500. So everything that we've looked at so far, other than Bookmap, has been is based on static data. As I mentioned before, Spotgamma takes open interest data that's updated once a day, sometime during the night. They apply their own proprietary algorithms to this data to come up with the gamma weighted open interest, the levels that we talked about, the Vanna model, the term structure. They take volatility data for that. So everything that we've looked at so far, other than Bookmap, that I use in my planning process, is based on static data. So now I'm going to start taking a look at real-time data. So first of all, this is the hero signal, hedging impact real-time options. This is showing what options traders, and this is showing options trades and market maker hedging activity for the S&P 500. There are two lines on this chart. The first, the white line, is showing price for SPX, and the purple line, that's the hero signal, again, hedging impact real-time options. That's showing options trades and market maker hedging activity for a combined signal for SPX, SPY, XSP, and ES futures. So when traders buy and sell calls in all these instruments, market makers hedge those trades with ES futures, and that shows up on this chart. Again, it's real-time data. All right, let's zoom in on this chart, take a closer look. So in the morning, the options trades, hedging activity were more typical of a positive gamma environment. This mean reverting price action, selling highs, buying lows. So there was a short setup this morning. Let's zoom in on this. And note that I have turned off extended hours trading on this chart. So I'm just showing this hedging flow and price action beginning at the 9:30 cash open. So here was a short setup this morning. That was at the upper daily expected move. Traders started taking negative delta positions and price responded lower. And then right around 10:10, hedging flow shifted positive, and market makers started taking positive delta positions. And one thing I forgot to do, let's go take a look at Bookmap, and then I'm going to jump back to yesterday. So there was a short setup this morning, long setup, and then we'll take a look at those two setups. Let's go back to ES. Let me just check hero again. So the first short setup was right around 9:50, and the long setup about 30 minutes later, 10:10. We'll zoom in on this. So trading in a pretty narrow range this morning. So here's the short setup this morning. It looks like there were about 5 tests of the upper daily expected move. The volume dots are showing market buy minus sell. Green volume dots indicate there are more buyers than sellers, and magenta dots indicate more sellers than buyers. You can see the shift in order flow here right around 950. Aggressive buyers on the way up, and then aggressive sellers start to come in. There were some additional clues here in the subchart. Note the falling yellow line. Those are stop orders. A falling yellow line indicates sell stop orders. That's often a very good directional indicator. Also CVD, sloping lower, that's cumulative volume delta. All right, so that's the short setup. And then notice in the subchart, buy stop orders and aggressive buyers come in, and you can see the shift in the volume dots again. Aggressive sellers on the way down, magenta volume dots. Aggressive buyers come in at that 47.27 level and take price up above, up to the upper daily expected move again, and then a little bit above that. So short setup and long setup, not a lot of range. All right, I'm going to step back and take a look at yesterday. And I meant to do that first, but we'll get started with that now. So this is a screenshot from ES yesterday, the entire day. And notice the key level here. This is the 475, the SPY 475 call wall. The SPX 4800 call wall is still above. So price moved up to this level. A lot of chop before the cash open. And as I put it yesterday, ready, set, go. Traders start buying aggressively at the cash open. Take the ES up above the S&P 500, up above the 475 call wall, and really can't make any progress above that. So yesterday, when I was talking about setups, I call it the theme of the day was call walls. So there's the first. The S&P 500 stuck for quite a while. Looks like about 4 hours or so above the SPY 475 call wall, then breaks lower. We'll take a look at the hero signal in just a minute. So there's the first call wall, acting as resistance as expected, the 475 call wall. All right, the next, let's take a look at NASDAQ and a screenshot from yesterday. And this, you can't see the label here, but this is the QQQ 410 call wall, one of these white lines here, also acting as resistance. So there's the second call wall, and price made it, the S&P 500 made it a little bit higher than the 475 call wall, but NASDAQ was really stuck mostly below that level, the 410 call wall. All right, I also talked about yesterday, I don't have any screenshots, but again, I talked about the theme of the day was reaction to call walls. Netflix finding resistance at its 500 call wall, NVIDIA finding resistance at the 500 call wall, and Tesla finding resistance at the 260 call wall. So a lot of call walls in play yesterday, acting as resistance and also acting as an early warning signal that price, definitely not going to move higher. Resistance at all those call walls. All right, now let's take a look at the hero signal from yesterday. There was a lot of commentary about this yesterday. So we know that S&P 500, NASDAQ, Netflix, NVIDIA, Tesla, probably more, were finding a resistance at their call walls, could not move higher. And then right around 1 o'clock, the hero signal started shifting lower. This is for the S&P 500, that combined signal for S&P 500. Now on this chart, I'm showing two lines. The purple line is showing the hero signal for all expirations. This is all trades. Anything expiring from the day that would be yesterday up until weeks or months in advance. And then the green line here, the teal line, is showing 0 DTE trades. So that's really next expiry, and for the S&P 500 that would be 0 DTE trades. And note the very strong correlation between these two lines, how close they are together, indicating a lot of the trade yesterday was options trades, was 0 DTE trades. So focusing on the 0 DTE trades now, makes a peak, hero signal makes a peak just right around 1 o'clock, starts moving lower, and then right around 1:30, 1:35 starts moving sharply lower. So when traders take negative delta positions, buying puts and or selling calls, market makers take the opposite side of those trades, and they have to sell futures to hedge their delta exposure. So a lot of the flow yesterday was 0 DTE trades. So the early warning signal was the resistance at all the call walls, and then really the catalyst for the move lower was the large trades in 0 DTE options, driving price lower. And again, market makers had to sell futures to hedge their delta exposure. All right, so there you go. There's my review of yesterday. And great, I hope that makes sense. And also for you Spotgamma subscribers, Brent has commented on that in the founder's notes. All right, so I talked about setups, short and long, for the S&P 500. Let's take a look at NASDAQ now. So let's go back to hero. Take a look at the NASDAQ signal. Not sure what's going on. May need to refresh this. All right, here's the signal for NASDAQ. So similar up and down to S&P 500. First of all, a short setup. Instead of at 950 for NASDAQ, it was at the cash open. Traders started taking negative delta positions. Then around 1010, they start taking positive delta positions. So again, a short and a long. In the case of NASDAQ, the hero signal has continued to trend higher. And hero continues to trend higher. and traders are buying calls. They're also buying puts. Call buyers more aggressive. Call buyers shown with the orange line, and put buyers shown by the blue line. All right, let's go take a look at Bookmap. Zoom in a bit. All right, so short setup, and this is just focusing on this earlier portion today. I need to actually zoom in a little bit more. And actually, I was wrong. It looks like the best entry for the short was right around 950. Multiple test of the, and I'm looking at the wrong index. No wonder. Sorry about that. Let's go to NASDAQ. All right, that's better. All right, short setup from the open. NASDAQ made a series of lower highs. There's 950 entry at the upper daily expected move. You can see the shift in order flow with each of these lower highs. Aggressive buyers on the way up, aggressive sellers on the way down. And then right around 1010, the hero signal shifts to positive. Very clear signal here. Aggressive buyers start to come in, shown by the green volume dots, finding support at the 650 level, absolute gamma strike, call wall, and moving back up to the upper daily expected move. Then, of course, the big move of the day was after 11:30 or so. Let's go take a look at, go back to Hero. And that was also signaled in with Hero here. Right around 11:35, traders started taking negative delta positions. Let's take a look also at the Magnificent 7 signal. This is a combined signal for all the 7 stocks in the Mag 7, Magnificent 7. Pretty choppy signal here today. Confirming the short at the open, the long right around 1010, and then the short again here, showing the sharp move lower right around 1150. All right, let's take a look at some stocks. And the first I want to take a look at is Apple. This is one reason I like to trade stocks. The signal is often much more clear. So this is Apple, and the hero signal is definitely moving lower from the cash open. Traders taking negative delta positions. Note the timely flow alert here, getting your attention, signaling significant options activity. Let's go take a look at the Bookmap. Go to Apple. And Apple continues lower. Note 195 is the key gamma strike. Support, then resistance. The targets are typically very clear in Bookmap for stocks. The heat map in Bookmap is showing history, the limit orders in the order book. These dark bands, these are indicating resting limit orders. Below price, they're limit buy orders. They act as a magnet for price. Apple makes a sharp reversal just after the cash open, breaks below VWAP. Makes a series of lower highs, good entry points. As traders take negative delta positions, and market makers take the opposite side of that, so they have to sell stock to hedge their delta exposure. The next is AMD, just the opposite. Let's go take a look at Hero for AMD. And WRB, yeah, I'll take a look at IWM. I don't have it in Bookmap, but we can take a look in Hero. AMD. The orange line showing call buyers. Takes a little while, but right around just before 10:15, traders start aggressively buying calls, and AMD breaks out of the chop. Note the flow alert again, signaling significant options activity. Traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. Let's go back to Bookmap. Note there are a lot of aggressive buyers starting to come in AMD, starting right around 10 a.m. Notice all the green volume dots. Market buy minus sell, aggressive buyers. And then finally, AMD breaks out of this chop, this final move, test of liquidity right around 137.50. As traders start aggressively buying calls, AMD breaks above VWAP, above the 138 level. Aggressive buyers and call buyers help to move AMD higher. Let's take a look at Meta. Go to Hero. And today Meta had trouble at its call wall at 355. To move lower, the 355 call wall set up a short. As traders started taking negative delta positions, Hero started to make a series of lower highs. Let's just break out puts and calls, see if we get any clarity from that. Not a lot really, taking a look at the total signal. It is choppy. A little bit hard to read in real time, so that's why I look at Hero and Bookmap at the same time. Here the order flow is pretty clear. Sharp move higher, aggressive buyers shown by the green volume dots, and then aggressive sellers start to come in shown by the magenta volume dots, and Meta breaks below the 355 call wall, doing its job and acting as resistance as expected. All right, the next stock I want to take a look at is Tesla. Let's go take a look at Hero, see what options traders are doing. Tesla. So Tesla, there was a short early in the morning, but really the best trade was this long right around 10:10. Note the timely flow alert again, signaling significant options activity, and as Spotgamma points out, these flow alerts often are good for mean reverting trades, and that was certainly the case today. Initially traders were taking negative delta positions, and right around 10 o'clock they started taking positive delta positions. Price responded higher. Let's see what they're doing. So starting right around 10:10, they started buying calls and selling puts. Buying calls shown by the orange line, sorry about that. And selling puts shown by the rising blue line. And when these lines are moving in the same direction, that's a very powerful directional indicator. And it's hard for price to move in the other direction. When traders are buying calls and selling puts, it's highly likely that the stock price is going to move higher. Let's go back to Bookmap. So here's the reversal higher. Magenta dots on the way down, aggressive sellers, aggressive buyers start to come in. Tesla makes a series of higher lows. Final reversal at the 250 level, and price moves higher. That was good for 3 or 4 points in Tesla. Let's just take a look at Hero again. All right, so 250 is the key gamma strike. All right, so long setup in Tesla. So a mixed picture today. Apple negative, AMD and Tesla positive. All right, IWM. WRB wants to take a look at IWM. Let's go to Hero. And hedging flow in IWM is negative today. Let's see what traders are doing. So they're buying calls. That's shown by the positive notional value here. They're also buying puts. Put buyers much more aggressive than call buyers. So net for the day, the total signal is negative. Call wall up above at 200. Another timely flow alert here, indicating significant options activity. And Michael asked, does this work for ES futures as well? Yes. So I talked about futures earlier today. So for futures, this is the signal that that I take a look at. Let me turn off the extended hours. So this is the combined signal for the S&P 500, SPX, SPY, XSP, ES futures. So when traders buy and sell calls and all these instruments, market makers will hedge those trades with ES futures. That's the most efficient way for them to hedge the S&P 500 with ES futures. So that's why I look at this combined signal for ES futures. And that's also, let's go back to Bookmap. That's why I convert the SPY and SPX levels to equivalent ES levels. So I can see everything on ES. So as I mentioned at my introduction, if I show setups when I'm trading any form of the S&P 500, this is the chart that I look at. There's the most information on this chart. I have the SPY and SPX levels on this chart. Also, Bookmap shows stops and iceberg orders. Order flow, very easy to read here in ES. And then I'm looking at the hero signal. When I'm trading, I'm looking at the hero signal on one screen and the ES, for example, or Bookmap, whatever I'm trading, on the other screen. So this provides the most information for trading the S&P 500, whether it's ES futures or SPY shares, SPX options. All right, Michael, I hope that answers your question. All right, so it looks like the ES still trying to recover, finding support at the volatility triggers. Let's check NASDAQ. All right, Michael, you're welcome. And Zachariah, you're welcome as well. All right, NASDAQ. Also finding support around the 405 level. That's the QQQ volatility trigger. Maybe now trying to break that downtrend. Let's see what options traders are doing. And last call for stocks. Does anyone have any other stocks they want me to take a look at? Hero signal pretty much flat for the afternoon for S&P 500. Let's check NASDAQ. Hero signal continues to move higher for NASDAQ. Traders taking positive delta positions for NASDAQ. Notional value positive for the day. Let's check MAG 7. Pretty much flat for the day. slightly negative, but starting around 120, something like that, started taking positive delta positions again. So far today, there's not been a repeat of yesterday with that mini flash crash. All right, everyone, I'm going to wrap it up now. I want to thank you very much for watching. Thank you for your questions and comments. Thanks for watching. Remember, tomorrow PCE data comes out at 8:30 a.m. Eastern Time. Could be a market mover, and we'll talk about it tomorrow afternoon. All right, thanks, everyone. Have a great afternoon, and I will see you tomorrow. Bye.